Hey guys, we're back. Another weekly options update. I gotta say that this one's gonna be rather short because there isn't much going on. I'm kind of in a holding pattern, but market's been choppy, like I suspected they would be. Luckily, yesterday, oil has fallen, so if it falls more, that's good for the market. But we do have the Fed announcing rate increases coming up soon, today actually. And if they do something more than a quarter point, we can probably get a larger reaction out of the market. With just the quarter point, I don't know. I don't think we're gonna have a huge reaction. Maybe a small amount, but it's not gonna be nothing major, I don't believe. There's just so many headwinds right now, right? You got the conflict overseas, you got interest rates, you got inflation, you got oil, and it's just all compounding, right? So keep an eye out. I know I've talked about this on the live stream, and I've talked about this in the Discord. Keep an eye out on the Qs. I'm looking at the Qs here. That 320 mark. And what does that 320 mark consist of? It's basically 20% down from when we started the year. And that mark is important to hold here, in my opinion. And it's a good strong hold, I think, because it's been challenged twice, and each time it's been bought up. You'll see here back in February it went down to 318, which is just a little over 20% down year to date, and they bought it up. And the same thing yesterday, went down to about 318, and today they bought it up aggressively. So beyond that, if some other bad news happens and this 320 area doesn't hold, I'd be looking in the 300 to 310 range for the Qs. So we'll see if they only do a quarter point, and hopefully they keep their mouth shut about doing a ton more for the rest of the year. Maybe they'll just say we'll see. Could be a positive thing for the market. Now we're going to go through the options. Not a whole lot going on here. So we'll just kind of run through it. So I always cover the trades from the Wednesday, the week prior to Tuesday close, all the opens and closes, and we'll go through the premium cooking. And then since this is going to be a short one, I'll go through what's expiring this Friday and what I plan to do. So last week, closed out a lemonade put for 25 cents, profited $39. Wait, is that the ninth? Is that enough? Yep, that was the ninth. Profited $39 in 6 days. Closed out my QQQ credit spread that was long dated. Profited about $115 there in 52 days. And then I was early assigned on METV, that's the Metaverse ETF, which I'm fine with because I already owned some shares at like $14, so I'm fine with averaging down there. So that contract expired worthless, profit of $44.80. So that's it for the closures. That's all I did all week long. So let's take a look at what I opened, which is even shorter than that. So we'll go down here. You'll see I opened one lemonade put at a 1750 strike out to April 14th. Got $110 for that one. Again, I'm just trying to lower my cost basis there. I have one expiring. Well, we'll talk about that when we go to the expirations for this Friday. So now let's take a look real quick at premium cooking. Now you'll see, whoops, I got the date wrong there. Let's change that to 315. Closed out 3 positions, opened one. Profit realized $199.05, better than a poke in the eye or a red week. And the premium sold $109.35. That was just that lemonade put. Total premium cooking, $6,320.77. Maintenance margin of $34,100 for buying power usage of 30%. Cash balance went down to 83,207 because we bought that the assigned puts on the Metaverse ETF. No deposits, no withdrawals, and this cash balance will probably go down a lot more next week. We'll talk about that on the next slide. Net liquidation went up a couple $1,000 up to 111,800. 0.62% return on maintenance margin and 0.18 return on net liquidation value, and those are the profits realized versus the respective figures from the week before. So profit realized divided by maintenance margin of last week, and then profit realized divided by net liquidation of last week. Now let's take a look at how we are doing overall in the market, and we'll see the percentage decrease calculator. I started out at 123.1, ended yesterday at 111,800 for a 9% decrease year to date. And if you compare that to the overall market, it's not too shabby, because you got the S&P 500 down 11%, the Russell 2000 down 13%, the NASDAQ down 18%, the Dow Jones is the only one that's doing much better at 8.3% down for the year. So now let's take a look real quick at all the stuff I have expiring on this Friday. I normally don't share this, but it'd be good to talk through. Maybe I'll share it every week now, or at least when I have some stuff expiring this week. So we have 5 things that are in the money. First one is TQQQ. We got a 47.50 strike. I believe I have 2 contracts there. Current price is 43.55. Now it's going to depend on how close it is on Friday. I mean, theoretically, this thing can still shoot up and become out of the money, and then I won't have to deal with it. But I'm really contemplating on just taking that. If it doesn't fall very far from where it's at, I would probably just take the shares and sell calls. So that's TQQQ. SPLG, those are currently out of the money. I have 2 of those, but it's only out of the money by 13 cents. So if they do get in the money, I planned on taking these as well. This is the S&P 500, just ETF. It's just plain market ETF. So I wouldn't mind taking 200 shares of that and selling calls on it. QLD, that is the 2X version of TQQQ basically. I'd probably roll this one, and I'd probably roll it to the same strike. It's $6 out of the money, so it'd probably be a good one to roll. SPYV, that one's out of the money. That's a S&P value ETF. I don't suspect that to be in the money at Friday, but if it were, I'd probably take that one as well. QYLD, 33 cents away from being in the money or out of the money, or you know what I'm saying. I think I have 2 of these contracts, and I would take those, add to my income holdings. And I talked about Lemonade. That one's at 20. That one will probably expire, and I'd probably take it to lower my cost basis, and I'd probably sell a covered call very close to the assigned price. And then last but not least, we have XYLD that's in the money by 29 cents. I would take that and add to my income holdings. So overall, not too shabby. April will be a little different because I'm still hanging on to those ARK-K puts, so we'll have to deal with that when the time comes. And that's all I got. Hope everything, of course, you're going to be hearing this on Wednesday. Hopefully the market digests the Fed meeting, and hopefully they don't stick their foot in their mouth too bad. And hope you guys have a great week, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.